So let me take this opportunity to welcome you to our today's session. Today we are doing employment income once again, and we discussed the areas of the theory, and today I want us to focus on the computations. I'm starting with April 2024 question, just from the exam which was concluded the other day. So the question is already displayed on your screens, as you can be able to see there. So the question reads, John Musyoka is employed as a finance manager by Safari Real Estate Limited. He reported the following details of his income and that of his wife, for the year ended at 1st December 2023. So number one, we are being told there, he was entitled to a basic salary of 400,000 per month. The paid, which was deducted, was 120 per month. He was also entitled to an annual bonus of 120,000 shillings during the year. The bonus for the year ended 2023 was, however, not paid until 2024 February. And then you can be able to see that bonus was not captured in 2023, and therefore is not a taxable benefit. Now, when you look on note number 3, we are being told that the employer provided him with a motor vehicle of 2600 cc. That has a cost of the company. With that, it costed the company 3.2 million. And the examiner continues there, telling me that the vehicle was valued at 2.5 million at the beginning of the year 2023. Now, when you look on the computation of the motor vehicle, we normally compare only two things here. We normally compare the CC ratings of the vehicle, and also we normally also compare by taking the 2%, or that is per month, you multiply by the months in which the employee has been using the vehicle, you multiply by the cost, the total cost of the cost of the vehicle is not about the valuation. Now, note number 4, we are being told about the mortgage. His annual mortgage repayment of 820, inclusive of interest of 180, was settled by the employer. So the loan was obtained from the Elite Bank on 1st January 2023 to purchase on residential house. When you look on that mortgage interest, the mortgage repayment, you will be able to realize that the 180 does not, it is not part, the 180 is an interest, which is going direct to the Elite Bank Limited. But now, when you look on the money in which the John Musyoka was able to enjoy, was the difference between 820, you deduct the interest. The difference is what was the benefit for Musyoka. Then note number 5, we are being told the following deductions were made from his salary during the year. We are being given subscription to Jenga Golf Club. Those are non-taxable benefit. Then when you quote them in an exam, you normally get a mark there. Then we have the contribution to a registered pension scheme. And you can see these are the from his personal salary, right? These are the contribution, and therefore they normally offset the benefits. They normally offset the benefits on the side of the deductions. Now, when you look on note number 6, we're being told he received a gross dividend of 80,000 from his shares in Safari Real Estate Limited, where the withholding tax was paid by the company. Now, when you look on the gross dividends, these are the dividends income, which you cannot be able to estimate. They were, we have been told they were from the Safari, and therefore they form part of the other incomes of John Musyoka. Then in note number 7, I think to note number 9, discusses about the incomes and aspects of the wife. And we are being told his wife, Janet Musyoka, is employed by Bright Farmers Corporate Society Limited as the general manager at a basic salary of 160 per month. He also she is housed within a company, Corporate Society's Farm, where she contributes 5% of her basic salary as rent. And when you remember, when you look on the notes which I have already provided in the group, you'll be able to realize that when you are computing the housing benefits, we normally compare two things here. we normally take the 15%. The 15% we multiply by the total employment income, the total employment income. Then we normally minus the nominal rent, and the nominal rent is what you are contributing, right? Then we normally compare to the market values and we minus the nominal rent. But when we are going to be having those kind of problems, I will be able to explain further. Then she received free farm produce worth 24,000 during the year, the benefits. Other income comprised of interest income of 10-year infrastructure development bond of 120,000. And when you look on how we are investing today, the government infrastructure bonds, they are not taxable. And that is why you see under the Finance Act 24, as per the discussions which are there, you'll be able to realize that there is a proposal to remove the exemptions, the exempt tax for the infrastructure bond and being capped with 15% for more collection of revenues to the government. Let us see the developments on that. When you look on the interest from Wema Development Bank Limited, and the examiner is putting a net there, right? We don't tax net. We normally convert that income to gross, right? We normally tax our incomes and interests, dividends and interest as gross values. We don't work with net. And then therefore it means when you're going to be computing on those incomes, we'll be able to convert the ones which are net to gross. Then the gross farming income of 240,000, excluding the family consumption valued at 30,000. You can see there we will be able to take 240,000 as an income. Other income for his wife, who is called Janet Musyoka. Then we have been told note number 10 that John Musyoka and his wife Janet Musyoka have been filing separate tax returns to the Revenue Authority. And note number 11, we have been told to ignore the computation of affordable housing levy. Requirement there, we have been told to compute the tax income for John Musyoka and his wife Janet Musyoka for the year ended at 1st December 2023. Then the other thing there we have been told is to determine the tax payable, if any, on income computed in C1 above. I know that we might be experiencing some challenges here when we are computing the employment income. And when you look on the employment income aspect, it means that, or any topics for taxes, you normally start with titles. And I stated earlier, I said, it's very important for you to download an app. That app will be assisting you to view the questions. Will be assisting you to view those questions. Now, let me share my board. I think you'll be having that to continue with. Right. So I know that you are having you'll be having the question by your side. And I think that my board is visible. Okay. Now, we are doing public finance and taxation. Public finance and taxation. And the topic that we are discussing today, we are discussing employment. We are discussing employment income there. We are discussing the employment income. And that is why I just want you to go and you check on the notes. They will be able to guide you to sort out the problems of the questions of the employment income. Now, you normally come up with a title. Let me start by computing for, is it called John Musyoka? Right, it's called John Musyoka. We are discussing about, you have to start with the titles for all the questions for taxation. So here we are talking about 2023 employment income computation, employment income computation there. We have a column there for Kenya shillings. My Kenya shillings, I can put thousands here. Right. Now, you normally go back to your notes and you normally start and you normally do the question, following the the notes provided by the examiner. So when you look on these notes here, for example, we are starting with the first part. We are being told he was entitled to a basic salary, right? So we are going to be starting with our basic salary. So the basic salary, remember we are being given 120,000, and remember we have minimized our thousands. Yeah? So I just need to take 120 times 12, unless I've been told this employee was released during the year. There is no any point I have heard about that. Is it 400? Sorry, it should be 400,000. In our case, should be 400 shillings. 400 shillings there. So when you take your calculator, you just need to take 400. We multiply by 12, getting 4,800 here. That is the basic salary for the full year, right? The payment, the aspect of the payee will be considered later. So kama uko kwa exam room, you just need to underline that area of payee, right? Now, number two, we are being told he was also entitled to an annual bonus of 120,000 during the year. So we have the bonus. Here we are being given 120. That is a bonus. Number three, we are the bonus for the year, all right, we said this bonus was received for the next year, right? So we are being told that this bonus is not taxable. And you just need to write like this. And you put here a dash. You'll be able to get a mark, right? Now, the other thing here, we are being told he was also entitled to an annual bonus, sorry. Now, not number three, the employer provided him with a motor vehicle. So here we talk about motor vehicle benefits. So what do we normally look here from our notes? We normally look at the CC ratings. The CC ratings of this motor vehicle, I think, is 2600. 2600 CC as per the notes provided. When you look at the chart here, and that is where you have to be following up on this front page of your exam papers, you can see we are being given the CC ratings here, right? For the saloon cars, hatchbacks, and estates. So we are being given up to, and you can see the 2001 to 3000, the CC, the value is 103,200, right? So when you go back to your paper now, so the CC ratings for 2600 is 103,200. 103,200 there. Then the motor vehicle is based on now the income tax act discusses about this. We normally take 2%. This is the rate per month. We multiply by the months the employers being with the vehicle. Then we multiply by the cost. The cost of this motor vehicle is 3.2 million. Right? So it will be 0.02 times 12 times 3.2 million. We are getting 768,000. Once you finish doing this, between the two, you normally take the higher values. Between the CC ratings and the 2% is capped by the Income Tax Act, you normally take the higher value, which is 768. Which is 768 there. Right? Then the other thing that I can be able to see on those notes of ours there, we are being told about note number 4, right? Is annual mortgage repayment of 820,000, inclusive of interest of 180, right? Was settled by the employer, right? So the mortgage.
I have a question.
Yes.
We were told in that number 3, second paragraph, the motor vehicle was valued 2.5 at the beginning of 2023.
And that is why I say, when you are calculating, I remember when I was reading the question, is like there is an area of Yacho Mohammed. I said, we normally take the cost. The 2% of the cost of the vehicle, you multiply by the months. We don't look on the valuation. We look on the cost of the vehicle.
Okay, thank you.
Okay. Now, his mortgage repayment of 820,000, inclusive of interest of 180,000 shillings, was settled by the employer. The loan was obtained from the Allied Bank on 1st January 2023 to purchase on residential house. So in this case, when you look at it, you'll be able to realize the mortgage interest or the mortgage repayment, because these are mortgage repayments, sorry, the mortgage repayments on the purchase of the house right? We look on the part yenye John Musyoka was able to benefit. So ile pesa ni benefit out of this was not, is it 820? You say the interest is not for ease. So it's 820 minus 180, getting around 640. 640 there. 640. Now, note number 5. Note number 5. We are being told the following deductions were made from his salary during the year. But before we go to that, let us look on the other incomes. Let us look on the other incomes, other incomes, other incomes. So when I look at that on the other incomes, you'll be able to find the other incomes of John Musyoka was around not number, is it not number 6? Yes, is it not number 6 now? Not number 6. Ukiona nimeruka point, ujue tutairudia baadaye. So we are being told he received a gross dividend of 80,000 shillings from his shares in Safari Real Estate Limited, where the withholding tax was paid by the company. So here we have the dividend income. The dividend income. So the dividend income we are being told is around 80. Now, let us go to the deductions. Okay. Who is that now? Okay. Now, when you look on the deduction is what you normally contribute as an individual, right? It is normally used to offset these benefits on the computation of the taxable or employment benefits or tax payable. So here we less what? Number 1, we normally look on the contribution towards the pension scheme. Contribution towards the pension scheme. So the actual, when you look on the actual contributions for Musyoka, he was able to contribute 180. As note number 5 talks about, we have been the contribution to a registered pension scheme is 180. Then we normally have a set limit. A set limit for pension scheme is how much per year? We talk about 240. All these caps are in your notes. They are in your notes. So when you come on the lower side here, we normally look at the lower values. We look on the lower of the side of deductions. So in this case, we are deducting how much? We are deducting 180. Right. From the information which I read there is no any other point which is affecting the areas of Musyoka. So we can talk about the total taxable income. The total taxable income will be how much? This is what you have been required. The total taxable income for Musyoka is how much? So you take 4,800, right? Plus 768, plus 640, plus 80, plus minus 180. Minus 180. Here you are getting something closer to 6108. 6108. I'm still thinking about the mortgage repayment. Let me just talk about the Janet now. We look on the Janet Musyoka. So on the Janet Musyoka, you do the same things, right? On the Janet Musyoka, you still do the same things. So let me see whether we can be able to see there. No, we can't. Let me twist my camera so that you can be able to access that part. Okay. So when I'm looking for the issues of Janet Musyoka, right? I just have Kenya shillings there. Allow me just to reach there because of my space. So Janet Musyoka, as per the information that you have been provided by the examiner, the information is provided there from note number 7. We are being told his wife Janet Musyoka is employed by Bright Farmers Cooperative Society. So you are going to be writing the title, Janet Musyoka, 2023 Employment Income Computations. Sometimes we might be asking the reason as to why we are doing this computation separately. You normally know that the income, the aspect of the taxation in Kenya regarding to the individual tax returns, everybody, regardless whether you are married or not, you normally pay your incomes from your personal incomes. So everyone normally files his or her own returns. So that is why we are separating them. That is why we are separating them. Now, in this case, we are being told that the basic salary was 160. 160, we multiplied by what? 12. We have not been told that he was employed at a certain period during the year, that is 1920, right? 1920 there. Then the other thing we are being told here is she is housed within the cooperative society farm where she contributes 5% of the basic salary as rent. Now, when you look at the housing benefit, when you look on the housing benefit, we normally take 15% of employment income. So in our case here, we will be talking about 15%. We multiply it by the only income which we can be able to see from Janet Musyoka is 1920. Then we subtract the nominal rent. The nominal rent is what we are contributing. In this case, he is contributing 5%. 5% of 1920. Mwanafunzi mwingine mrefu atasema 15% minus 5% alafu multiply by 1920 apate 192. Hapo Mohamed najua umeshika. Nimesema mwanafunzi mwingine atachukua tu the rates, atasema 15% minus 5%. Apate 10% and multiply by this. But even if you do this, you'll be able to get 192. Then we are being told that there she received a free farm produce. So here we can be able to talk about the farm produce, right? The farm produce. So she received the farm produce worth 24. Now, let us look on the other incomes. The other incomes here, we are being told we have the infrastructure bonds. Infrastructure bonds. Unakuja hapa esto unasema they are not taxable. Unasema they are not taxable. Unaeka dash. You are getting your 1 mark there. Then the other thing there, you can talk about the interest income from Wema Development, right? We have some interest. And I know you're asking, the interest zipi which the withholding tax is final from Wema. So those ones is the thing that we are going to be discussing next after we finish up with the employment income. I will just be able to elaborate when the interest is final, when it is not final, where the withholding is subjected to further taxation, like the one that we are doing right now. So the interest of Wema here, we are discussing about 85,000. 85,000, right? So 85,000, we are being told it is net. It means they have already deducted the 15%. And that is why today, when the accountants are filing their returns, they are saying there is a withholding. There is a withholding VAT certificate, which you have to be checking on. It relates to how much. That is one case. So it means that when you are withholding, it means the person who is paying you, right, is remitting a certain proportion. For example, 2% for VAT, 15% on the interest and so on, is remitting that proportion to the KRA, right, on your behalf. Ni kama anakushtaki. So that you can be, he is just saying, I have done a business with you. So that is why they are withholding. So in this case, it means when you are doing your employment income, you need to take the gross amount. So here we multiply by 100 over 85. Other students will just be able to come here and they say 85,000, you divide by 0.85, you're going to be getting by the same answer, right? The other one will be saying, if 85%, they have already submitted the 15%, right? So it means the proportion is 85. What about if we return it to 100? Itakuwa pesa ngapi? This translates to 100,000. In our case here, we talk 100. We talk about 100 there. Then we are being told there is a gross farming income, right? There is a gross farming income. there is a gross farming income, the gross farming income. So let me go there. The gross farming income of 240,000, 240,000, excluding family consumption, valued at 30,000 shillings, 30,000. So, Mohammed, is it 270 or we go with 240? Is it 270? They have excluded the family consumption of 30,000. So our figure is 270 for the gross farming income, or is it 240?
It's 270.
270. 270, yes. Right? We need to get the whole of it. 270, 270. So that is the gross farming income. And that is why I said, I'm thinking for this. If the guy was able to repay the mortgage, he could pay for the 820. And then the company was able to pay for the 820 for him. So that it means the benefit which he received is not 640, should be 820. That is why I said I have to think about it. 820 there. I will be able to come to the total and make some adjustments. Now, we are being told in note number 10, we are being told in note number 10, in note number 10, we are being told there, John Musyoka and his wife Janet or blah blah, we ignore that. So what are the totals here first? What are the totals? Right. Hatujaambiwa Janet Musyoka alikuwa na any contributions she was making. So let me start for the John Musyoka, 4,800 plus 768 plus 820, sorry for that, plus 80 minus 180. We are getting 6288. 6288, right? That is the benefit. Then when you look for the other lady there, we have 1920 plus 192 plus 24, that is 124, right? 124 plus 270. Someone is asking me inatoka wapi. Now what you are getting is 2506. 2506. That is not number one. Not number one there. They are saying to compute the tax income for John Musyoka and his wife for the year ended at 1st December 2023. So when you look on the marks here, we have the marks, 1 mark for the title, 2, 3, 4, 5, 6, 7, right? 8 for Janet Musyoka, 9, 10, 11, 12. Hata ushapitisha. That is what I was explaining sometime. We normally look at the items which you can just be able to feed and you move on in an exam. Ushafikisha 11, you just proceed. Those are must, you finish the question. Ushaona you have put the correct entries. For example, 11. Don't waste your time there. Move to something next to save time for the next papers and questions. Now, let us look on the determine the tax payable, if any, or income computed in C1 above, right? So let us look for that. Let us look for that now. Tax payable. And when you look on these tax payables, we normally use the graduated scale rates. They are very simple. They are very simple. I will be able to show you how you should be cramming these things. Now, we are talking about, what are we talking about? The tax payable now. And we are going to be starting for the John Musyoka. No, the tax payable for John Musyoka, we are going to be taking the graduated scale rates. Now, vizuri, if you are cramming, when you are dealing with taxation, you will fail in the exams. The graduate scale rates, ukiangalia ya 2023 December, is different from the 2024. Let me show you. The graduate scale rates are different now. So let me show you here. This graduated scale rate is very different from whatever we did. So when you look at it, the annual tax pay, ukisema umeanguka mtihani alafu unaendelea kufanya na you're starting to do with the videos for the last semester, you failed. Now, in this case, you can see the graduate scale rate is different. So when you come here, when you are doing your graduated scale rate, you're going to be starting with the first range. The first range there, I have seen it is 288,000. 288,000. You multiply by 10%. You are getting 28,800, right? The next one, because I can see the income ya Musyoka is 6288. So we go to the next, and we look at the differences between the next range is not Nangalianga, the higher side, not at the lower sides. So the higher side will be the difference between 388,000 minus 288, right? In this case, you are getting 100,000. Then you multiply by the rate. The rate is 25%. The 25%. Then this one, you are getting 25,000. Okay. The next one, the next range I can see is 6 million, right? 6 million now. So when you look at it, the 6 million yake ni 6.2. 6.2 million, right? So in this case, hapo unakuja unaniambia, we are taking 6 million, which is 6,000 in our case, minus 388. What is the difference? So you say 6,000 minus 388, getting 5612 times 5612 times 30%. Times 30%. So 5612 times 0.3, we are getting 1683. 1683.6. Next, we are looking at the balance now. What will be the balance? The balance will be, let me look at that. Might be reaching the maximum without even knowing. A minute, please. So it will be looking like that. Okay. So the balances should be at this point, by the way, because I should be saying, sorry, I should be saying here should be 6288 minus 6,000 now, right? Getting 288. There is where the balance is coming, and I can just be able to go back and explain about the balance. So you have started the first cup, the second cup, and then you can see the third cup, our income is 6288. I was not considering when I was doing that. So 6288, we subtract that range. The maximum I can see is 6 million, right? So 6288 minus 6 million, you are getting a difference of 288. So 288, you multiply by 0.3, getting 86.4. Sorry for that. So what will be the total here? You say 28,800. 28,800 plus 25,000. 25,000 minus, sorry, plus 86.4. 86.4, how much is that now? 86,400. 86,400 plus 86,400. Okay, we are getting 140. Someone will be able to confirm 200 there. Then we deduct. We less here. We will be able to start with the basics for the income tax. So we start with the personal relief. Personal relief per year ni ngapi? We are being told it is 24,400. 24,400. The next one will be, what is our pay? We were being told the pay which was deducted during the year was amounting to how much? The pay was how much? So the pay per year,
120.
right?
Pay is 120.
Pay per year was 120.
Per month.
120 there, right?
That's per month.
Mtu aniambie where we are getting wrong, but let me correct myself. 62,88,000. Let me see whether we are getting the correct made answers. Okay, from 0.3, 86,400. Okay, plus 53, 800. Okay, so the pay was 120,000. We multiply it by 12. Because per month we are being told was 120,000. So if you take 120,000 times 12, you are getting how much? 1440,000. 1440,000, right? Now, does this person has any other income here, right? We have dividend income. This income, the withholding tax, we do a withholding tax of 15%. 15% of 800. 15% of 800. 0.15, we multiply by 800. You are getting 120. Is it 120,000? 15% of 800 should be 120,000. Right? Now, let us look at the tax payable or refundable. Are we having the tax payable or refundable? Is our tax payable or refundable? The tax of ours, is it payable or refundable? Let me start with Vincent Mwathe. What is our answer there? What is our answer here? There are people who are watching Arsenal. Arsenal cannot win the Premier League. They don't watch us. So how much is our answer? Now you can be able to calculate by yourself, but what I can be able to see, we have some refundables there. So the same again, you do the tax payable for Janet now. So badala ya kushinda ukifanya hii kazi yote, sometimes it is very good when you are compiling this. They are totaling to 53,800. So ukianza kufanya the tax payable yako, unakuja hapo unasema the first, it is allowed. You say the first 53,800. Naeka hapa mbali sana 53,800. That is the first. Then you talk about the balance now. The balance ni ngapi? The balance yako unaona, you are taking 2506. 2506 inafanywa aje? Let me check. Minutes. So the balance here, we are talking about 6,000 minus 2506. This one you multiply by 30%. How much are you getting there? How much are you getting there? So 6,000 minus 2506, we multiply by 0.3, getting 1048.2, 200 there. Okay. So 1048, 200 plus 53,800, you are getting 1102, 1102,000. Then you deduct the pay, personal relief, personal reliefs. So the personal relief, it should be, the personal relief yetu ni ngapi? Personal relief is 28,800. Hata kwa karatasi pale, you'd be able to see that. Now, pay yake alikuwa analipa ni ngapi ya Janet? I want people to contribute now. Pay ya Janet ilikuwa ngapi? Pay ya Janet ilikuwa ngapi? You have been told his wife, Janet Musyoka, is employed by Bright Corporate Society as a general manager, as a basic salary of 160 per month. There is no any pay there. Now, let us look for the withholdings, the withholding tax reliefs, and we'll be able to start with what? The withholding tax relief will be able to start with the interest from Emma. Interest ya Wema. Ile 15% ya 1,000 now. Ile 100,000. The gross amount, 100,000, totaling to 15,000. Correct. Then we also have the farming income. farming income, right? The farming income. The farming income iko na withholding? Hapana, haina. So how much is the tax payable here? Tax payable. How much is the tax payable there? How much is your tax payable? That is what the examiner wanted you to do. That was the requirements of the examiner. Any question? Any question? Esther? Any question, Esther? Esther is not there.
Hi, Mwalimu.
How are you?
I'm fine. At the moment, I don't have a question, but I hope maybe next time once I get it right, I will have many questions. Thanks.
Very good. Anyone else?
Mwalimu ikikuja negative number.
Kuna mtu anaongea akiwa mbali sana.
Hello.
Yes, I can hear you.
Yeah, mwalimu ikikuja negative hapo ni refundable ama payable?
Negative ni refundable.
Okay.
Negative
Positive.
wanakupea pesa ingine, wanakupea pesa kutoka kwao.
Oh, okay. Thank you.
Anyone else with a question? There is a question which I want to do. It is going to be providing a very good basis for the employment income. August 2022, question number 3C. Let me go there, please. August. But the rates we are doing with today's rates. So August 2020. Let me go back here. August 2022. Easier. I said you download the Loft app. I want someone to read for me now. Tuanze na mgeni yoyote atusomee hapo. Mgeni yoyote asome. Mohammed, you can read.
It's August 2023, question.
Question 3C. It is already on our screen.
Yeah. Henry Musyoka is employed as the finance manager at Panda Limited. He has provided the following details relating to his income for the year ended at 1st December 2021. Number one, his employment contract provided for the following: basic salary of 182,500, transport allowance per month of 12,000, leave paid in December 60,000. Number two, he was accommodated in a company-owned house where he has deducted 25,000 per month as annual rent. If the house had been rented at the market value, the company could have been charging the monthly rentals of 45,000. The company furnished the house for him at 260,000. Number three, he was paid 120,000 as a Labor Day award by the company for being the most hardworking and committed employee during the year. Number four, the company had registered pension scheme for his employees where he contributes 15% of each employee's basic salary. Henry Musyoka contributed 10% of his monthly basic salary towards the scheme. Number five, he was enrolled to a medical scheme with Bahati Insurance Limited, where he spent shillings to 30,000 on medical bills during the year. The medical scheme catered for senior employees only. Number six, his wife was given goods worth 180,000 by the company during the Christmas season. Number seven, the company provided him with a cook and a security guard from 1st October 2021, where he paid them months of thousands. Yeah, can you hear me now?
Yes, yes.
Yeah. The company provided him with a cook 1st October 2021, where he paid them monthly salaries of 15,000 and 20,000 respectively. Number 8, on 1st July 2021, he secured an education insurance policy for his child at an annual premium of 150,000 payable by the company. Number 9, he was out of work station in the month of September 2021 for 8 days, for which he was paid a daily per diem allowance of 5,000. Number 10, pay deducted by the company from his salary was 46,500 per month required. Number 1, taxable income for Henry Musyoka for the year ended 31st December 2021. Roman 2, taxable tax payable, if any, on the income computed in C1 above.
Thank you. So you can see you're being given some write-ups there. And the question is a bit straight, but touches more about our notes regarding to the computation of the taxable income. So in this case, when you come up across this question, you don't need to panic, as I say earlier. You just need to start with the, your city has a lot of entries. So how can you miss the correct 12? How can you miss the correct 12? So you are going to be starting with the title. We talk about Henry Musoki, and we write on the caps, Henry Musoki. So in this case, we are talking about 2021 employment income computation here. So we are going to be starting with Kenya shillings there. And you know very well, you can start with a basic salary. So you can start with a basic salary there. So how much is your basic salary? When you go back to the notes, to the question, you'll be able to find, is employment contract provided? Employment contract, the basic salary was 182,500, right? You multiply by 12. One more, Mohammed was ready sijasikia alifutwa during the year. So in this case, unaniambia vizuri here. 182,500 times 12, getting 21,900. All right, 21,900. The transport allowance per month. The transport allowance amounts to how much? So in this case, it is 12,000 multiplied by 12, getting 40,000, right? 14, is it 1440? 144,000. Then the other one, we have been told the leave pay. The leave pay, which was paid in December, was paid around 60,000. Was paid 60,000. Then we have been told it was accommodated in the company's own house, where it was deducted 25,000 per month as nominal rent. If the house had been rented at market value, the company could have been charged monthly rentals of 45,000 shillings. The company funded the house for him. So wewe unaruka history yote. Unaenda kwanza unafanya the furniture benefits. The furniture benefits, unakuja hapo unaniambia the furniture benefit would be how much? We normally talk about the 1%. 1% times 12. 12 is the number of months, unless aliyama during the year. Then you multiply by the cost of the furniture, which is 260,000. So you just need to take 0.12, right, times 260,000, getting that 1,200. I think you know that 1% times this, you get 0.12. The next one you're being told, unaachana na hiyo story house benefit, ndio tutacalculate ya mwisho. Now, the other thing we're being told, he was paid 120 as a Labor Day award. So you talk about a Labor Day. A Labor Day award amounting to 120 for being the most hardworking employee. These initiatives are not everywhere. Then the other thing we have been told, the company has a registered pension scheme for its employees, where to contribute 15% of the employee's basic salary. Henry Musyoki contributed 10% of his monthly basic salary towards the pension scheme, right? Towards the pension scheme. So here you say the employer's contribution. The employer's contribution towards pension scheme, unaniandikia hapa, not taxable, and then you put a dash. This is a mark. That is a mark. Then the other thing here, hiyo ya Musyoki tutakuja kurevise baadaye. So if you are having the paper, you put a star. He was enrolled to a medical scheme with Bahati Insurance Limited, where he spent 230,000 on medical bills during the year. And we have been told the medical scheme catered for senior employees. Remember when we were discussing about the medical schemes, we said they are always they are non-taxable if they are not discriminatory. Discriminatory, it means it covers all the employees. But when you look at this, it covers some of the employees. It covers some of the employees. So here we are talking about medical benefits. Medical benefits. We say it is discriminatory. When it is discriminatory, it's a taxable benefit, right? That is why they have told you it only covers the senior guys in the organization. So that is 230. Correct. Now from there, we are going to note number 6. His wife was given goods worth 180,000 by the company during the Christmas season, right? Goods provided to the wife. We are being told is 180,000. 180,000. Correct. Then also we have the company provided him with a cook. We have a cook and security guard. We have a cook and security guard. So the cook, and remember they were provided from 1st October 2021, where it was paid a monthly of 15 and 20. So 15,000 and 20,000. How many months? We multiply by 3 months. October, November, December. This one comes to 45,000. And this one comes to around 60,000 there. 60,000. Now, we are also being told down there, on 1st July 2021, he secured an education insurance policy for his child at an annual premium of 150,000, right? Education policy was secured on 1st July, right? So, the education policy. Now, remember, the policy in Asema per year is 150,000, right? So the company, they secured an education insurance policy to his child at an annual premium of 150, which is payable by the company. So I'll enjoy it for only 6 months for this year. So we talk about 150, this is around 75,000 because it's half. Okay. Now, we also been told he was out of work station in the month of September 2021 for 8 days, right? And here we normally discuss about per diem, right? So the per diem will be, he was provided how much per day? Per day he was given 5,000, right? 5,000. Then you subtract 2,000, which is exempted, right? Utaiona kwa notes, the 2,000 is exempted. Then you multiply by 8 days. You multiply by 8 days. So it is 3,000, this translates to 24,000. That was per diem. Then we also have the pay deducted was 46,500 now. That is done. Now, when it is done like that, we normally come here and we discuss about the house benefit now. The house benefit now is the time to do it. It will be 15%. 15% of the employment. So it will be 15% of what? 15% of all this. Correct. Now, in this case, I'm just going to be taking my summation up to here. So how much it is? 2190 plus 144 plus 60, right? Plus what? 31.2 right? Plus 120, plus 230, plus what? 180, plus 45, plus 60, plus 75, plus 24. How much it is? That 159. That 159, 200. That 159, 200. Sindio? So that 159, 200. That 159, 200. Sindio? Then when I go back to the statement regarding to this, the house benefit, note number, this provided note number?
Number 2.
Number 2, correct. So he was accommodated in a company-owned house where he was deducted 25,000, right? So you take this employment, you subtract the nominal. He was paying 25,000 for 12 months, right? So how much is this? What would be the answer there? So you say 0.15 times that 159,200, right? This is 473. 473,880. Then we have 25,000 times 12, getting 300,000. So the difference would be 173,880. Correct. Then the other one, we compare with the market value. When I look on the market value, they are telling us the market value is 45,000 times 12 minus the nominal value of 25,000 times 12. So 45,000 times 12 minus 25,000 times 12. We are getting 240 here. So when you are talking about this, before the deductions, we said we normally take the higher value, which is 240. The higher value, which is 240,000 there. From there now, we normally go to less our deductions. And our deductions here, as per the question, we are talking about the contributions towards pension scheme. So what is the contribution? We know you can start with the set limit unless you ski and contribute during the year, right? And contribute miezi ngapi. This guideline is not number 4. The company has a registered pension scheme for its employees where to contribute 15% of the employees' basic salary. Henry Musyoki was able to contribute 10%. Hakuna mahali umeambiwa ita contribute kuanzia mwezi wa 7. The same limit we take for the whole year, 240,000. Correct. Then the actual contributions. What is the actual contribution? He contributed 10%. 10% of what? 2190. So this comes to 219. Between the two, we take the lower, which is 219,000. 219,000 there. 219,000. Na hii swali na mambo ingine inakwisha. So naimalizia hapo. Unasema, can I be able to determine the total taxable income? So how much will be taxed? So in my case, mimi napiga a shortcut. Mpaka hapa tulisema ni that 159,200. That 159,200 plus 240,000. Right? Minus 219. Right? So is that 180. Kama umefanya kama mimi. That 180. That 180, 200. Kama uko na energy, you can just start by computing from up there. Now, when you look on the tax payable here, we are going with the graduated scale rate for the current. So 288,000, we multiply by 10%, getting to 28,800, right? Then we go to the next. The next will be, I said you take 388 minus 288, you get 100,000. 100,000 we multiply by, I saw the rate is 25% if I'm not wrong, getting 25,000 here. Then we look at the balance. The balance will be how much? 6 million. 6 million. 1, 2, 3. 2 zeros. Minus that 180. 200. Then we multiply by which rates? Let me go back to the question and see. So the current rate for the graduated scale rate for that one is around 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. 30%. So it will be itakuwa inakaa namna gani? We take 6 million minus 3180 200 3180 200 times 0.3. We are getting 845. Ukifanya na that period, you might not be able to get the same answers, right? So plus 53,800. We are getting 899, 740. 899, 740. Then we deduct, we say less personal relief. And our personal relief, I said it is straightforward, unless mtu aliajiriwa during the year, but that is what even the system will be able to pick. Payee. The payee which she was able to pay. Ukiangalia pale mwisho wa swali yako, at the end now, the payee she paid 46,500. We multiply by 12. 46,500, we multiply by 12, we are getting 558,000. 558,000. Hakuna income hapa zinahitaji withholdings, right? We say the tax payable. The tax payable will be how much? 899,740 minus my answer minus 28,800, right? We are getting 312. I have said this might differ. Might differ from that period we were doing those questions from December because of the graduated scale. Tukiangalia this time is so high compared to the one for those previous periods, from those previous periods. What else now? What else? Let me look for another question which I can just be able to work for you. Do you have one question? Any question there? So let us go to December 2022. Then we shall take a break. I come and do December 2023. Then we conclude, we look on something different. I've said we are looking at which period now? We are looking at December 2022. December 2022. You just go to your loft. You can see I'm not struggling with these questions. So December 2022 is here. Now someone will be reading for us. Okay. Henry Mwala now. Someone to read, please. Someone to read. Can we hear Esther reading now?
Question C. Henry Mwala.
I can't hear you.
Henry Mwala, who holds a dual citizenship, had been living in Denmark since September 2014. He returned to the country on 17th December 2020 and opened a hardware shop on 2nd January 2021. On 1st July 2021, he secured a formal employment with Best Freight Limited, a logistics company, as a fleet manager. He provided the following information relating to his income for the year ended 31st December 2021. Number 1, basic salary of Kenyan shillings 180,000 per month, payee of Kenyan shillings 46,000 per month. Number 2, he was paid overtime amounting to Kenyan shillings 30,000 per month and a risk allowance of 25,000 Kenyan shillings per month during the year. Number 3, the employer provided him with meals worth shillings 5,000 per month. Number 4, he received house allowance of Kenyan shillings 60,000 per month. Number 5, up to 30th September 2021, he used his personal car for official duties and the employer reimbursed a monthly mileage allowance of Kenyan shillings 40,000. Number 6, on 1st October 2021, he was provided with a saloon car of 2,400 cc purchased by the company in the year 2019 at a cost of shillings 2 million. Number 7, he was out of office on official duties for 5 days and received a per diem of Kenyan shilling 6,000 from the employer. Number 7, the company paid school fees of Kenyan shillings 80,000 for each of his 3 children during the year. This was included in the employer's book of accounts. Number 9, the employer bought a Kenyan shillings 120,000 air ticket to facilitate Henry Mwala to visit the rest of his family in Denmark during his annual leave. Number 10, with effect from 1st July 2021, he contributed Kenyan shillings 15,000 monthly as a pension contribution and Kenyan shillings 92,000 for his life insurance annual premium respectively. Number 11, he bought a residential house on 1st September 2021 through mortgage of Kenyan shillings 6 million provided by Excel Bank Limited at an interest rate of 16% per annum. At an interest rate of 16% per annum. At 16% per annum, he moved into the house on 2nd October 2021. Number 12, the net loss from the hardware shop during the year amounted to Kenya shillings 370,000. This was after deducting the following: salary for salesperson, Kenyan shillings 1,050,000, VAT paid 180,000, rent 680,000, electricity 30,000, furniture and fittings to 50,000, and computers 300,000. We are required to determine the total taxable income for Henry Mwala for the year ended 31st December 2021. And also, we are also required to compute the taxable pay, if any, for the income computed in C Roman 1 above.
Very good. So when you look at the questions, I just like the questions now, they are being drafted so that they can be able to open up our mind regarding to employment income. And when I look at this question, I just want to provide a solution for you. But first, I say it is very important for you, you start with the title, right? Now, when you look on the questions, and when you're doing taxes, very important to factor the days. You factor the days. Now, when you look at it, let's start with the title. We are talking about Henry Mwala. So Henry Mwala, we are discussing about a period. Which period now? We are talking about 2021. Employment income. Employment income computation. The employment income computation, you put your Kenya shillings there. So we are going to be starting with, and we are looking at the period in which he was employed. We are being told here that Henry Mwala, who was a dual citizenship, have been living in Denmark since September 2014. He returned to the country on 17 December 2020 and opened a hardware shop on 2nd January 2021, right? On 4 July 2021, he secured a formal employment with Breast Freight Limited, a logistic company, as a fleet manager. Remember, he was employed on July. So here we are running with 6 months now. So he provided the following information relating to his income for the year ended that 4 December 2021. So when you look on the basic salary here, basic salary. So the basic salary as per now, we are discussing of 180 times 6, because they have already worked for only 6 months. And in your case, July, there is no way you will be able to do for the whole year. So 180 times 6, get it 1080,000, right? 1080,000 there. Then we have been told he was paid an overtime amount of 30,000 per month and risk allowance of 25,000 per month during the year. So the overtime allowance. So the overtime allowance itakuwa namna gani? The overtime I'm just going to be saying, the overtime I just take 30 times 6, getting 180,000. Correct. That is the overtime allowance. Then also there we are being told that there is a risk allowance. The risk allowance is how much? When you look on the risk allowance, it's 25 times 6. So 25 times 6, I think we should be getting 150, right? From there, we are being told the employer provided him with meals worth 5,000 per 5,000. So meals provided by the employer, 5,000 times 6. We are getting how much here? 30,000. I think I'm not fast. Now from there, he received an house allowance. Here we are talking about house allowance. So house allowance ni ngapi? When you look on the house allowance here, we are talking about 60 times 6, right? We are being told he received a house allowance of 60,000 per month. This translating to 36,000. The next one, we are being told up to September 2021, he used his personal car for official duties. And remember, those are only 3, it's right? It is July, August, and September, only 3 months there. So we are being told up to 30th September 2021, he used his personal car for official duties, and the employer did the reimbursement, the reimbursement of mileage allowance, right? Mileage allowance. So the mileage allowance itakuwa ngapi? The mileage allowance will be 40 times 3. July, August, September. That is 120,000. Mileage allowance is 120. We are being told down there that on 1st October 2021, he was provided with saloon car benefit now. So the car benefit, we said we are looking at what? CC ratings. So the CC ratings, ukiangalia value zake, ziko huko juu kwa karatasi. Hizi CC ratings zetu ni ngapi? The CC rating for this car is 2400. Unaenda huko juu. Kwani unaangalia 2400 inalai wapi? 2001 and 3000 per month is 8600, right? So 8600, because here we are doing the computation for monthly. So 86, remember we are running our question, or our point runs from October, November, December. So we just say 86,200 times 3 months. 86,200 times 3. Getting 258,600. That is the CC ratings. Then we come to 2% of the cost of the vehicle. How much is the cost of the vehicle? We are being told there, the cost of the vehicle in 2019, you can see here, Mohammed, when you are discussing on the cost of the vehicle, we are not looking on the valuation in 2022 or 2021. We are looking on the period, what was the cost of the vehicle, right? Then you multiply by the months under consideration. We are talking about 3 months, 0.02 times 3 times 2 million. We get 120,000. So you take the higher value here. So the higher value should be 258,600. Angalia kama nimeangalia hiyo rate vizuri. Let me go back and see whether it is okay. Yeah, 8,600. You see, I saw my own things. Per month is 8,600. That is like one. It should be 8,600.
Yes.
Right? 8,600 times 3. Inapaswa kuwa 25,800. 25,800. The higher value here should be 120. Sorry for that. 120,000. 120,000 there. He was out of the office, official duties for 5 days, right? Where he was given a per diem of how much? He was given a per diem of 6,000 minus 2,000, right? Then this one you multiply by the number of days. 2 tulisema ni exempted. The number of days yenye alikuwa nje ni 5 days. So 4,000 times 5, getting 20,000. Getting 20,000 there. Then the other thing that we are being told there, right? The employer, sorry, we are being told the company paid school fees of 80,000 for each of its children during the year. And we are being told there, This was included in the employer's books of accounts. When you look back on our notes there, I normally like to read that statement from our notes. So when you look on our notes regarding to this, I'm just going to my notes now so that I can read it for you. So when you look on our notes here, we have said regarding to the non-taxable benefits in note number what? Note number 6, we say the school paid on behalf of employees, as long as it is treated as an allowable expense in the computation of taxable profit by the employer. Kama angeziweka pale when he was computing is should be non-taxable benefit, right? Should be let me repeat again for better understanding for you. Non-taxable benefit, we are saying the school fees paid if it is not treated. But in this case, we are being told that the company paid school fees of 80,000 for each of his children during the year. This was including the employer's books of accounts. So kwa zile notes mimi nilikupea nilikwambia, under non-taxable benefits is when these are not included as allowable expense, right? So when you look at it, this school fees becomes the benefit. School fees, wacha nikuandikie notes here, because it is treated as allowable expense by the employer. Right? Because he has included an allowable expense. Zingekuwa an allowable expense, zingekuwa non-taxable, right? Zingekuwa non-taxable, but he treated it as an allowable expense, right? By the employer. So when it is treated as an allowable expense, from that point, inapaswa kuwa nini? Inapaswa kuwa nini? So in this case, we are talking about the company was able to pay 80,000 for each of his 3 children during the year. This was included in the employer's books of accounts. So we are being told it is 80,000, right? 80,000 times 3, watoto ni watatu, times how much? During the year. During the year, aliingia lini? Can we do it 6 months? Because it is not specified. It is not specified the period, whether the company was able to cover the period in which he was not here. This comes to 1440,000 there. 1440. Next we have what? Next we have
Excuse.
yes.
Is 80,000 not annual amount?
The 80,000 for each of it during the year. Thank you very much. So it should be like this, 80,000, hata mimi nimeona imekuwa mingi. 80,000 times 3, then we should be talking about 6/12. Is it making sense now?
Yes, yes.
Okay, so 240,000 divided by 2, it should be around that, and mimi nimeona imekuwa mingi. Imekuwa mingi hata kuliko mshahara. 120, because we have been with Henry Mwala for only 6 months. So hakuna vile calculate for the whole year. Now, the employer bought a 120 air ticket to facilitate Henry Mwala to visit the rest of his family in Denmark during his annual leaves. We are talking about passages. And there are some of the conditions regarding to passages in our notes. When you go back there, and I think it should be note number 1 or 2, we talked about the passages for expatriate employees, right? And when you look on the Henry Mwala, ako na dual citizenship, ako Kenya na ako Denmark. But we said on the aspect of the passages, for them to be non-taxable benefits, a passage is an expenditure of transport and translocation between Kenya and any other places outside Kenya. And we say it's normally incurred by the employer for the translocation, right, to for expatriate employee and these family members. But the passage shall not be taxable subject to the following. We said, one, the person must not be a Kenyan citizen. That is one. The employee must have been recruited. Hata hiyo moja inatoa tu, right? It should be an untaxable benefit. But kama Henry Mwala hakuwa na citizenship ya Kenya. So that is a benefit, 120,000. 120 there. 120,000. Kuna kitu ingine hapo. Let me see. Number 10, we have been told in effect from 1st July 2021, he contributed 15,000 monthly on a pension contribution and 92 for live what? That is the employer. Those are not taxable. You can just be able to write note there and you get some marks. Number 11, he bought a residential house on 1st September 2021 through mortgage of 6 million. Through a mortgage. He bought a residential house on 1st September 2021 through mortgage of 6 million provided by Excel Bank Limited at an interest rate of 16% per annum. He moved into the house on 2nd October 2021. That one takes us back to the house benefit now. When you look on the house benefit of ours, he received a house allowance of 60, right? 60,000 per month. 60,000. That is another house allowance. Okay. That one will be able to compute later. I know you might be having some questions. Not number 11 or 12. Not number 12. Wako unakaeka kadash when you are doing your things in an exam. So other incomes there. When you look on the other incomes, we have been told the net loss of the hardware shop. Let us start with the net loss of hardware. So the net loss ilikuwa pesa ngapi? The hardware ilikuwa 370,000. These are lost now. Sawa. And when we are going to the business income, we are going to be discussing about, we normally add back disallowable expenses. We normally add disallowable expenses. These are expenses which are not considered to be taxable under the Income Tax Act, right? They are not supposed to be allowed. For example, the salesperson, that is taxable, that is allowable expense to the organization, but the VAT paid. I don't know, ukiangalia the period you are paying your VAT, you normally to pay VAT after you get the income, the total income, right? But it is not treated as the expense to the organization. That is a disallowable expense. Okay, we'll be able to understand further when you're doing the business income. The other one would be the rent, okay, electricity, okay. But furniture and fittings, when you look on the furniture and fittings, they're supposed to be given the wear and tear. So we normally return the costs if it was deducted in a question. So the furniture and fittings is 250. 250 there. Then we have computers. You return the costs. We don't subtract the costs. So the computers will be how much? 300,000. So you get whatever you are going to be getting there. Then you're taking, for example, you are taking this negative of yours. 370 minus 370 plus 180 plus 250 plus 300. Here we are getting 360. So there are these expenses which were not deducted. And as per the Income Tax Act, they are supposed to be deducted. This one for these two. So hapo nakuja unaniambia, let us less allowable expense. And these were not deducted. So wewe usirudi kwa question pale uanze kuniambia, mwalimu hujachukua rent, hujachukua electricity. They were already deducted to arrive to 370, which was a negative. So which are the expenses which were not deducted and they were supposed to be deducted, right? So for example, the wear and tear for the furniture and fittings, the wear and tear, the furniture and fittings, they normally qualify at class 2, right? At the rate of 10%. 10% of the costs, which is 250, getting 25,000. Correct? Now you are getting something. All of these are topics which you are going to be learning. Also, computer, they normally qualify for capital allowances, plus 1, the rate is 25%. 25% of 300. Hizi utaziona sana before to arrive to the topic itself. So, utakuwa umezoea, this is 75. So the other income of ours should be how much? 260. 360 minus 100,000. Minus 100,000, you are getting 260,000 shillings. 260,000 shillings. Now, let us go to other deductions. We said, whatever we normally deduct here, we talk about contribution towards pension scheme. Contribution toward the pension scheme. I said we can work with the set limit first. So the set limit ni ngapi? When I look on the question, the set limit, huyu jamaa amekaa hapa 6 months. So the set limit will be 240,000. We multiply by 6/12, getting 120,000. That is the set limits. But when you look on the actual contribution, kuna mahali tunaambiwa alicontribute kitu. The actual contribution, it is not number 10. He contributed 15,000 monthly, a pension contribution, right? 15,000. 15,000 there. Times, he contribute for how long? From 1st July, correct? 1st July, 6 months. This translates to 90. Out of that, you take the lower. Our lower should be 90,000. Should be 90,000 there. Should be 90,000. Then, after you finish up with this, unakuja hapo chini unaniambia, kuna kitu ingine hapo waliongea sana. Inaitwa mortgage interest. Right? We do with the mortgage interest. And when you look on the mortgage interest there. So the mortgage interest, kuna mahali alipewa ka mortgage, not number 11, akanunua kanyumba. So he bought a residential house on 1st September 2021 through a mortgage of 6 million, provided by all that information provided there. So in this case, we are going first to be calculating the mortgage interest. Now, for this year, it is only working for only 4 months. October, November, December. Is it 4/3? It was supposed to be from September, yes. 4 months, right? So it will be, we are calculating the interest, and then we look at the set limits. It will be 6,000. 6 million, rather, times 16%, times 4/12. We need an interest for only 4 months. Then we look at the set limits. Per month, the limit here, the mortgage interest should be 12,500 times 4. Itakuwa ngapi? Right? So 12,500 times 4, I should be getting around 50,000 here. Then we have 6 million times 16, 0.16 times 4 divided by 12. We are getting 320,000. We take the lower. So the lower is 50,000. Don't mind about my space. Right? I think what you're supposed to be checking on is what is very important. So you can see in the question, it doesn't have the house benefits, but it is already provided you with a different concepts. The mortgage interest, we have not done for the first 2 questions we have done. And then the last question which I will be doing, it are different from this one. Okay. So let us look on the question which, let us look on the total taxable income here. Total taxable income. Total taxable income. Tunaanzia hapa 1080 plus 180 plus what? 150 plus what? 30 plus 36 plus 120 plus 120 plus what? 20 plus 120 plus 120 plus what? 180. No. That one should be 2. Yes. 120 here. Then we go to 260 plus 260 plus 1 minus 140. Sorry, minus 140. We are getting 296,000. 296,000. That is the total taxable income that we are supposed to be getting there. 296. 2096. That is the answer which you're supposed to be getting here. 2096 there. Unless there is any question. This is the answer now. Then from there, we use graduated scale rates. When you are determining to determine the tax payable. Okay. Let us look on the graduated scale rates here. Very simple. I mean, I find a shortcut now because I know shashika. Just do a shortcut. So hapo nakuja unaniambia, let us take the first. The first, we said it is 53. Is it 53,800? Let me see whether it is looking like that. 28,800 plus 25,000. Yes, 53,800. Then you look on the balance. The balance will be 6 million as per today's graduated scale rate. See ya kitambo. 296,000 multiplied by 30%. 30%. So 6 million minus 296,000 times 0.3. Get 1171. 1171 200. Hiyo yote utapata hapo. Plus 53,200. 53,800 there. You're getting 12,25,000. From here, we less. Usianze hata vitu mingi, unaanza na personal relief. The personal relief is how much? 28,800. No. Alifanya for 6 months, eh? The personal relief yake ni ngapi? 14,400. Are we together? 14,400 pay. Pay yake itakuwa ngapi? Unarudi pale kwa swali. How much is the pay? Let me just get to the question. So the pay alilipa 46,000 times 46,000 times 6. Masiku hapo za kuchanganya sana. 276,000. Right? 276,000. Do we have anything else apart from the two? Apart from the two, we have some insurance relief somewhere. Kuna insurance relief analipa mahali. Alafu akilipa hii insurance, anapata some relief out of it. So anapata 15%. 15% of what? What is the relief here ana contribute? He is contributing some reliefs at note number 10. Right? 92,000 for life insurance, annual premium, right? So 92,000, since we are just enjoying for 6 months, eh? So 0.15 times 92,000 times 6. But alianza kulipa lini? 1st July, correct. So here we are getting 82,800. Naona vile niko keen na dates, eh? So whatever you are going to be getting here is normally called the tax payable. The tax payable now. The tax payable will be 12,25,000 minus 14,400 minus 276,000. Eh? Then we subtract 82,800. Getting for 851,800. 851,800. This is what we discuss about the aspect of the computation of the employment income. Just want to take a short break there. Then once we resume, we'll be able to discuss December 2023. You can check on it before I come back. December 2023. Someone to read, please. Who was not taught today? Mohammed? Vincent, yes. Vincent, can you read? Vincent? Vincent is not here. Someone else?
Hello.
Yes, yes.
Okay. Rosemary Aswani is a resident individual who is employed as a senior financial analyst by United Homes Limited from the year 2022. She has provided.
Continue. Let me read. Rosa Swan is a resident individual who is employed as a senior financial analyst by United United Home Limited from the year 2022. We have been told she has provided the following information relating her income for the year ended at December 2022. Number one, she received a monthly basic salary of 4,000 from United Homes, and a bonus equal to one of the basic salary for the exemplary performance. Pay deducted during the year was 607,200. So here they have given you the pay for the whole year. Then we have been told the terminal dues received from our previous employment for service not rendered amounted to 1.4 million. A 4-year contract of employment was terminated 2 years in December 2021, and payment was made per the employment contract. So it was received during this year. So we'll be able to factor it as an income benefit there. Number 3, we have been told a commission of 100,000 was paid for her for promoting the sale of houses where 2 houses were sold to the customers she had referred to the business. She attended a 5-day masterclass for financial analysts organized by a professional body, and the employer paid 100,000 for the seminar, and she was paid daily subsistence allowance of 12,000 by the employer. She was given an offer to buy a house from United Homes at 20% below the market selling prices. So she accepted the offer and bought one house whose market selling price was 8 million. What was the benefit there? Remember that she was able to enjoy a rate which was 20% below the market selling prices. Now, we are being told that she has a fixed deposit account of 2.5 million at Maisha Bank Limited, from which she received interest of 150,000 during the year. She has a life insurance policy where she pays 60% of the premium, so the employer pays the balance. The annual premiums as per the insurance policy was 240. Remember, he is now enjoying 40% from the employer. You also been told she was provided with a lease saloon car of 2,000 cc by the employer for both personal use and official duties on 1st September 2022. The saloon car had an initial cost of 2.8 million and lease charges were at 6,000 per month. But the United Homes has a medical cover for the management staff. She was entitled to a maximum cover of 80,000 per year, although she utilized 420,000 on medical cover during the year. Number 10, she paid subscription fees to a professional body amounted to 24,000 during the year. Number 11, other incomes include the royalties, including 180 net of withholding taxes. The gross farming income of 450,000, out of which 80 was in respect of own consumption of farm produce. Then the part-time practice as content creator, where she was able to make 600,000 during the year. We have been told they are required to compute the tax income for the Rose Aswani for the year ended at 1st December 2022. Very simple here. So what am I supposed to be doing? Just come here. You start the analysis. So the question we are doing is for December 2023. December 2023, and it will be our last question to do. December 2023. Question number 3, it should be 3 or 3B. So you start with the title, is earlier stated, Rosemary Aswani. Right, Rosemary Aswani, we are doing 2022. Employment income computations. So in this case, we are talking about what is our basic salary here? So what is the basic salary? We have been told that she was provided with a basic salary of 204. So 204,000 times 12 there. 204,000 times 12. 204,000. Right? Hakuna mahali tumeambiwa yeye alifutwa kazi ama alianza kazi in between the year times 12, getting 2.4. Correct. Then on the same statement, we have been told there is a bonus. So how much was the bonus? We've been told the bonus equal to 1 month basic salary. The bonus of 204,000. That is over, not number one. Not number two. We have been told there is terminal dues received from our previous. So the terminal dues, they are taxable now. So the terminal dues from the previous employer amounted to 1.4 million. Terminal dues of 1.4 million. Terminal dues of 144, right? Then the other one will be not number 3. We have been told there is a commission of 100,000 which was paid for promoting the sales. Commission paid. So the commission was 100,000, right? Not number 4. We have been told she attended a 5-day master, right? 5 days master. 5-day. Sorry, she attended a 5-day master class for financial analysts organized by a professional body. And the employer paid 100,000 for the seminar, right? Seminar fees. So the seminar fees was amounted to how much? 100,000 here. We have things like, we have been told she was provided with the daily subsistence. Daily subsistence. Allowance of 12,000 by the employer. It was daily. So you stayed there for 5 days. It will be 12 times 5. You're getting 60,000 here. Correct. Now, in note number 5, she was given an offer to purchase a house from United Homes at 20% below the market selling prices. Right? 20% below. So she accepted the offer and bought one house whose market selling prices was 8 million. So what was enjoyed there? What were the benefits? What was the benefit there? The benefit was the difference which she could not be able to buy. So the house benefit here. So ilikuwa aje, unakuja hapo unaniambia 20. 20% inamaanisha ni 80. 20% below, 80% of 8 million. 8 million, we are getting 6.4 million. So ukichukua 8 million minus 6.4 million, alipewa benefit ya how much? He could have paid this, but he enjoyed the benefits of 1.6 million. Okay. Now, from there, we are talking about note number 6. She had a fixed deposit account of 2.5 at which at Maisha Bank Limited, for which she received an interest of 150,000. The interest from the fixed deposit account, we shall be able to analyze them later. We have been told note number 7. She has a life insurance policy where she pays 60% of the premiums, and then the employer will be able to pay the 40%, right? The annual premiums. Insurance policy. So the insurance policy, and I enjoy 40% from the employer. 40% of 240. 40% of 240, we get 96,000. 96,000 there. Okay, she was provided with a saloon car. So that is a car benefits. Car benefit, very simple. So the car benefit was provided. She was provided the car benefits for official duties on 1st September 2022. So those are only 4 months. So you talk about 4. Because we are starting with the CC ratings, It will be 4. 4 we multiply by what? What is the rate per month? The rate per month I can be able to see for that saloon car, which we have been told it is around how many cc? 2000. 2000 now is not 8600 as earlier. It should be between 1751 and 2000, which is 7200. It should be 7200. So hapo unakuja wananiambia 7200 times 4. 7200 times 4. We are getting how much? Getting 28,800. Then here you take the 2% times it should be 4 months times what is the cost of the vehicle. You're being told that the vehicle had an initial cost of 2.8 million, right? The saloon car had an initial cost of 2.8 million, right? So you're being told she was provided a leased car, right? So when we were looking on the car benefit, let me go there. Well, now they are giving a lot of information there. When you look on the motor vehicle, we say this is where the vehicle is owned by the employer, but it's used for by the employees for private use. The taxable benefit depends on the cost of the vehicle. So in this case, we have been told she was provided with a leased car. So when the car is being provided, where the vehicle has been leased from a third party, the cost of leasing the vehicle shall be the taxable benefits. That is what I was looking at, right? The cost of leasing, the leasing cost. I think you have been able to understand the vehicle does not belong to the employer because we've been told she was provided a leased saloon car, given everything there, but the vehicle was leased. The lease charges were 36,000. So the leased charge, the leasing charge, 36,000 times 4. The period he has been using the vehicle. Small details you can see there, 144,000 there. Then the next one we are being told, United Homes had a medical cover for all the management staff. She was entitled to a maximum cover of 880 per year, although she utilized 420 during the year. So you can see there we have the medical benefit. It is not taxable since it is the benefit provided for management staff and she utilized for the medical. When you look at it, it is not discriminatory, not taxable. Now, note number 10, she paid subscription fees to a professional body amounted to 24,000. You can see that is what she paid personally. So it is not taxable. It is not a benefit from the employer. Note number 11, we are being told we have some other incomes there. So on the other incomes, we have some few things there. Number one, we have to be looking on the royalties. So how much is the royalties provided? 180 net of the withholding, right? 180. So when you're looking on it, we are taking it back to the gross. They normally withhold 5%. So in this case, it will be 180,000 times 100 over 95. 100 over 95. So it will be 180 times 100 divided by 0.95. Not getting the correct answer. Divided by 95. Getting 189,000. 189,474. Now, the other thing will be, I can see there we have gross farming income of 450, of which 80 was in respect of own consumption. Gross farming income. Yes. So the gross farming income is how much? 450,000. Right? Then we have been taught part-time practice, where she was able to part-time content creator. Content creator. She was creating and receiving something like 600 during the year. Right. So, that is the income. Let me see whether there is any point we skipped. So terminal dues, okay, commission, she attended 5, she was given. Don't think if there is anything we have skipped anywhere. She had a fixed deposits account of 2. We have the interest income. Interest income of 150,000. 150, right? She has a life, she was provided United Homes. There is not anywhere we were able to skip any point unless you are enlightened. Yes? Someone is trying to say something. Total taxable income is how much? 2448 plus 204,000 plus 1.4 million plus 100,000 plus 100,000 plus 1660,000 plus 96 plus 144,000 plus 189,474 plus 450 plus 600, that is 750. We are getting 7541 474. Now, when you go to the tax payable now, we start with the first 53,800. The balance, we take 7541. 7541. Let me see the graduated scale rate, how it looks like the current one, please. Allow me to check on it. So this one will be, next one will be, the next one will be 6 million minus 388 times 30%. Let me see here. So 6 million minus 388,000 times 0.3, 1683. Then we have the balance. I can see we have 9 million minus 75, 41, 474 times 30%. So 9 million minus 75, 41, 474, right? Is it that? No, the rate now should be 32.5. Right? Times 0.325. Getting 474,000, 474,021. Allow me to round off. So in this case, would be plus 1683, 600 plus 53,800. 2211, 2211, 421. Now we less pay. There is a pay which was given there when you were starting the question. The pay should be around 470, so something like that. Let me look on my question, please. 607,200. Then we have personal relief. So the personal relief should be 28,800 now for the whole year. Then we have royalties with all the tax reliefs. We start with royalties. 5%. 5% of 189, 474. 0.05 times 189, 474. Getting 94.74. Right? Then you also have the interest income. The interest income, it is 15%. The 15% of 150. So how much is this? Times 150,000, 22,500. 22,500. What is the tax payable? The tax payable now will be 2211, 421. Minus 607,200. Minus 28,800. Minus 94.74. Minus 22,500. We're getting 1543. 447. 447. 447. 447. Unless there is any question now. Unless there is any question. That is how the employment income is normally done. And that is how we do it. We do a lot of questions. You have been able to see that. We are doing a lot of questions to better understand.
Hello.
Looking at the different setups of the questions for you to understand how to do your revisions and also approach your exams. That is how I work. So allow me to stop at that point for today. So I will be able to wish you all good night and see you next Sunday. Thank you. Any communication you can make through the WhatsApp group, please.